Hello, this is Jordan, and this is your precious metals video market update. This is the evening of Wednesday, October 7th, 2015. Starting off, let's take a look at the daily candle chart of the US dollar. Now, in the very big picture, the US dollar index remains bullish. What we've seen since early this year in March, when the dollar peaked just above 100, is the dollar has been consolidating that huge move it had from the summer of last year from 79 up to 100 at the end of Q1 earlier this year in March. So the fact that the dollar has been holding above the 38% retracement, which is at 93, and also above previous major resistance around 88 to 89, the fact that the dollar is holding above those areas after such a huge move is long-term bullish. Now, in the short term here, we see that over the last month or two, the dollar has failed to climb above 96.5. So that's clear resistance. Not today, but yesterday, the dollar had a bearish move lower, closed below 96. And so you can see that in the very short term, it looks like the dollar is more likely to decline lower than move up and break above 96.5. So we have to look at potential downside targets here. And the main one that we see is right around 93 to 93.5. So the dollar has potential to go down towards that area. We'd also note that 90 is also a potential downside target. The 400-day moving average is at 89 and rising, and 90 is about the 50% retracement. So it is possible that the dollar can decline to 93 or even 90 and remain bullish in the big picture. So bullish in the big picture, but it looks like it's leaning bearish in the short term here and could get a lot more bearish. And the last point here is we do not think that gold is at a major bottom here. Now, looking back in history, typically gold bottoms 3 to 5 months before the dollar makes a major peak, and that's because gold is usually anticipating that peak in the dollar. And the fact is, if gold had already bottomed, we would have seen gold performing a lot better over the past 6 or 7 months when the dollar's been weak. But over that period, gold has really done nothing. It's basically at the same price it was when the dollar peaked. So again, if gold was, given that the dollar peaked back in March and it's been weak and gone down 5 or 6% since then, if gold had already bottomed, I believe we'd see gold trading well above 1,200, maybe even 1,300. So the fact that the dollar, putting all these things together, tells me that gold has not made a major bottom yet. But nevertheless, if the dollar is going to go down and it is leaning bearish, as we talked about, that is potentially bullish in the near term for precious metals. And the short term here is set up bullishly, I should say, for precious metals. Now, we know that silver at the bottom there tends to lead gold. Silver has already broken out. It's already broken out above 15.5, hit 16 today. It's possible that could snap back and test 15.5 before moving higher, but it has a measured breakout target of around 17. The same can be said for gold. It has a measured breakout target of about 1,200 and maybe a little bit below that, 1,210, 1,220-ish. And note where the 400-day moving averages are. They're just above those targets for both metals, but the moving average is declining. So we're seeing a potential, if precious metals here, if this rally is going to last for a month, maybe even longer than that, it is possible that the metals could hit their 400-day moving averages here, which are at 1741 for silver and 1221 for gold. Now, looking at the gold triangle, looking at how gold has performed at major lows, when it's at the start of a strong cyclical bull market, you don't really see this kind of triangle consolidation type move. That's not an indication of a major long-term turning point, in my opinion. Nevertheless, it could be bullish in the short term, and so if gold breaks above that, it's going to have some legs to go higher. And let's look at the miners. This is taking a big picture view. This is a monthly chart of the Huey Gold Bugs Index. Now, the miners, looking at the miners, silver and gold, I mean, the miners relative to gold have been extremely oversold. So it's likely that the miners could outperform gold here in the short term. The same can be said with silver against gold. I mean, we already see silver outperforming gold. It's broken its resistance, and gold hasn't yet. If we go back to that last chart. So, I mean, if the metals are going to make another leg higher, we see gold get to 1,200. The miners should act very well in that scenario. And looking here at the monthly chart of the HUI, we see that there's clear support at 100. Over the last several months, the Huey's carved out a little base there. Right now, it's pushing above key resistance around 117. It closed at 126 today. And there's a strong long-term resistance target of about 150. So looking at the situation here in the Huey, if we see gold get to 1,200 or even 1,220, as we noted in the last slide, it's very possible the Huey could continue up to 150. And with respect to, where could the bottom be for miners, I really don't know. But I'm going to keep an open mind. And who knows, if the miners have a good rally here to 150 and then they come back down, maybe they make some major kind of base or major kind of double bottom at some point early 2016. So that's just a thought, but the short term definitely looks bullish, and this could have some legs up to 150. And this is another chart of the miners. It's looking at the short term. We have GDXJ on top, GDX at the bottom. We already noted the miners relative to gold are extremely oversold. And as we said, if gold gets to that 1,200 to 1,220 target, the miners would have more upside. And looking at where the first potential target, that would be about the 200-day moving average for both these. We see GDXJ close at 2137 today. It's actually trading right below key resistance at 22. So if GDXJ can take out 22, I mean, I think it could get to 24 or at least the 200-day at 2365. Now for GDX, closed at 1561 today. Its 200-day moving average is right at 18. It also has resistance at 17. So that GDX is a cleaner looking chart right now than GDXJ, and that shows where the next upside is, 17 to 18. But the last comment here I want to make is, if you look at the last 2 days of trading, of course, yesterday the miners, they gapped up. They started to sell off, but then they rallied at the end of the day. Today they went up a little bit, then they moved lower. They rallied a little bit. So even though the miners have done well the last couple days, I mean, they haven't declined. They're looking a little tired. So it wouldn't surprise me if we see a pullback over the next day or even the next couple days in the miners. I wouldn't immediately jump right into the market. I'd wait for them to correct a little bit because they have been very strong the last 4 days. And so wait for a little snapback there. That might be a better, or I should say, a lower risk entry point. Now, here's the thing that concerns me in the big picture, why I believe the metals have not bottomed. I mean, I talked about the dollar earlier. That's one reason. Another reason is looking at the COT data, which I have for you here. I have the net position, which is basically the longs minus the shorts. And so I'm looking at all the non-commercial activity, and I divide it against open interest. I get a percentage. And if you look at the gross longs in the last report, 52% of open interest, gross shorts are 34%. So the net position is 18%. You see that in my net position field there. But even as gold has gone lower in the last year or two, I mean, look at the net position compared to 2 months ago it was down around 3%. I mean, that wasn't a whole lot below where it was at the lows in 2013. And specifically, my issue is the gross longs position. If you look at that chart there at the bottom right of the slide, you can see that the gross longs have never really capitulated. I mean, the net position over the last year and a half, or a little bit more than that, it hasn't even gone down below where it was at the end of 2013. And if you look at where over the last 14 years, since the bull market began, the lowest gross long position was 38%, and that was in 2007. So the gross longs have not capitulated yet. And by the way, if you look at this chart here for silver, it's even in a worse position. The gross longs for silver are much closer to their 3-year high than their 3-year low. So ideally what we would like to see, of course, gold has bottomed to 1080. It hasn't gone down to that $970 to $1,000 target. But if gold is going to eventually turn lower and make another move lower, we want to see the gross longs capitulate. We want to see that come down hard. And of course, we'd see the gross shorts probably rise at the same time, and you could probably even get a COT where you see the commercials are net long and the speculators are net short. But to really start a new bull market here, I mean, following this really long bear market, I mean, the bullish situation is you'd have really high gross shorts, and they have to cover when the market turns. But also you want to see really low gross longs. It's at 52% right now. We really want to see that go below 40%, go below the 2007 low of 38%, because at the bottom of the market, if you have a big short position, those shorts have to cover. And if the long position is really low at that point, then the longs have already sold. So the longs have already sold, so there's no selling pressure there. So the shorts are covering, that pushes the price up. And then the longs, since their position, they've already sold their position, the longs are only going to be able to buy an increase. So that is kind of what I sense how we could see the next bull market start. And just the way it is right now, with respect to gold and silver, it just leads me to believe we haven't seen a capitulation yet. And who knows? I mean, the market looks bullish here in the short term. Maybe this is something that happens early next year. So I know that was a lot, but that's all I got for today. We're giving away our book for free. Go to thedailygold.com/book, and we'll send it to you for free. And you can follow more on my work at thedailygold.com. You can email me, jordan@thedailygold.com, with any comments or questions. Thank you all so much for listening and watching, and I wish you all the best.